All right, what is up, traders? Welcome to the official Trade Talk channel where I teach you how to analyze price for the most consistent and higher probable entries so you can become a better trader. First, we're going to talk about a potential bullish and bearish entry. This is going to be a very important video. It will teach you how I analyze daily ranges because I am a day trader. I am looking to take intraday opportunities, looking to capitalize on the daily range expansion. This will in turn allow me to get into some pretty good swing trades if I take those positions at key turning points in time. So right here, what you see on the chart is today and yesterday's range. All right, let me do this. My computer is lagged up for whatever reason this morning, so it is going to be a little glitch and choppy. I am going to buy a new PC. I just haven't figured out if I want a laptop or a tower, but that's neither here nor there. Anyways, moving on. So this is yesterday's open. You can see that yesterday open set in a high of day. Do not pay attention to anything over here. We're only focused on these 2 days. Yesterday, today. So yesterday we open, set in a high of day, and then the range expansion runs off into the lows, and then boom, shakalaka, trades all the way back up, sets in a new high of day, comes over here, and closes on the highs. So this first initial push up from the open was a trap for retail. It gets you off sides. If you buy this, assuming that this is going to be bullish continuation, you were stopped out here. And if you were short this, thinking that you were going to capitalize on a move, if you took profits on the way down, you had a profitable trade, even though you were on the wrong side of the market, which that occasionally happens to me as well. It's going to happen because we can't see into the future. We do not know how the market's going to react. That's why I built this channel, so that way I can show you where the opportunities lie in the daily ranges. So today, there is only 2 entries that I am looking at for today's entry. It can be a bearish entry or a bullish entry. So what we know from yesterday's range is that the bulls won. We know that yesterday was a bullish day because it closed higher than it opened. That makes it a green candle. That turns it into a bullish candle. So this is the open. You can see here on today's open, which was yesterday evening, Eastern Standard Time. Once that occurred, you traded sideways, setting in a support that maintained old support here from that close. You can see that it held, but you set in a high, a new high, but it was lower than yesterday's high, and then you expanded to the downside, tagging yesterday's open absolutely flawlessly. This is how price moves. It tests areas, and those areas are where orders are. This is why we know where supply and demand is, because we can see what price did at that price, what the market did at that price. So your short side entry for today is your supply. Right there. We know that that's hourly supply. We know that that's the daily supply because price traded up, set in a new high, and instantly rejected. If price trades back up into this area, you would be looking for a bearish trade, something along the lines of this. That swing high would be your stop, and then today's low would be your take profit. Now the thing is don't take profit at the low. Don't wait for the low to get pierced to take profits. You take profits ahead of the low. What I would typically do is I would start scaling out of my entry once price gets to 42,734 because that is support. That is the daily support, intraday support, right? Because that's your lowest bearish close at this point in time. So that would be support. So price could go down there and reject. My job as a trader when I take entries is to get that risk out of there quickly as possible. I do not want my risk just laying around out there for price to just swing by and take it out. So that's going to be the only bearish entry at this point in time. Now, that might change later on in the day because we have new data every single hour. But basically, that would be your short position. Now, the bullish entry, this would be the same thing. Intraday target would be this, but you would want to take your position as close to the low of day as possible. How do we know what is the low of day? We don't. we never know when price sets in a low of day. We can look and see where that is. If it corresponds with yesterday's open, that's pretty good spot to take a high probable bullish entry. I am leaning more bullish on this range expansion, so I have already set my bullish entry in there. You can see that this is my target. I have set a limit to scale out positions at resistance, which was just filled on this push up. All right, so basically, since that's support and the low of day, I want to have my entry as close to that as possible. Basically, you have a nice hourly close here. Two things happened on this hourly close. One is you got back above hourly support, which would be an indicator that this is potentially nothing more than a stop run because you closed immediately back above support. This is support. It's the lowest close until this happened. So now this then becomes support. So if you're bullish on the day, which you should be, because yesterday's open versus today's open is up. So you've migrated up from one day. Now, if this open was down here, then I would be looking for bearish entries on the swing high, looking for the daily range expansion to the downside. But since yesterday closed bullishly and we opened today higher than we opened yesterday, that indicates that the bulls are in control of this market. So now that you've seen a successful trade on my end, let me show you this here. So this was my risk, right? Entry is this, the open of this bullish candle. This is the entry, or you could wait on this pullback and enter. This is the best way to wait for the retest. Sometimes you won't get to retest. Sometimes you're going to miss trades, but that is all part of trading. It is going to happen. You can make them consistent. You can look for the same things, which is what I teach on this channel, to help you become a better trader. So you can see here that this is a 3-to-1 trade. And up there, taking a bearish entry there to there would have been a what? 2-to-1 trade. So the risk to reward was more suited on the bullish side of things. So it's about like a 2.5, 2.39 to 1, whereas this is a 3-to-1. So the risk to reward was better down here. That's what better risk to reward means. At this point of time in the daily range, the risk to reward was better for bullish entries than it was for bearish entries. What I said earlier about the stop or the close migrating up, so that's your bullish range moving higher. This is just a pullback on the bullish day's range expansion to the upside. Now it can fail here, chop around and roll over and make a new low of day, but the trade, the daily range has already happened. The profits were already booked. I have my stop moved to break even. So if price does migrate back down to here, more than likely I will be stopped out. But today's range was nailed. My risk is completely mitigated. I took profits, so my trading account grew by a small percentage, and I am still in the position running up into the 55K area, if that's where price wants to go. And I am not in any way, shape, form, or fashion going to lose any money if that does not occur. And that is mitigating your risk inside of the financial markets. If you like the video, please make sure you hit the like button. Make sure you subscribe if you haven't already, because this channel is just getting started and it's going to have a lot of wonderful things on it in the future. So thank you so much for being here, and thank you so much for all your support. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.